Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Nilesh Gupta and you're watching Indian Open. Let's go straight to the headlines at this hour. Donald Trump says he has a good chat with Xi Jinping, fueling optimism of the trade war ending in 2019. Banks armed with an array of schemes made better progress in recoveries and resolutions in the last financial year, shows the RBI data. A stronger rupee and lower crude prices prompt foreign investors to pump in 5,400 crores last week. And Sheikh Hasina is all set to retain power in Bangladesh, extending a record as the longest-serving prime minister in the country. Well, let's take a look at the trade setup for the day today. It's frankly all emanating from global cues that we are doing what we are doing today, and I'll get to that as well. Firstly, the US Treasury yields have dropped 2.7 or thereabouts. These are the lowest level in a few weeks or months now, but for all the fears of higher rates, etc., coming in, there's more ammo now for the people bullish on lower rates or rates pausing. Because yields have come off and have continued to come off. It's not a flash in the pan move, by the way. Crude prices, they've posted the third weekly loss. Brent has closed in at about 52.5, 53. Essentially, irrespective of the levels, whether it's 52, 53, 53.5, the point being that Brent is finding it extremely difficult to move above that $55 per barrel mark. Made a flash dance to that last week sometime, but since then has kind of stayed sideways to mildly lower. So we're not seeing upticks coming into crude prices. That aside, I think the bigger news on Sunday was Donald Trump tweeting out that he's had a very productive conversation with Xi Jinping. This is his tweet, and I quote, that just had a long and a very good call with President Xi of China. Deal is moving along very well. If made, it will be a very comprehensive one, covering all subjects, areas, and points of dispute. Big progress being made. This had the Twitterati aflutter, yes, but I would reckon that in part, the Asian screen is showing signs of some progress on the basis of the deal, because of which, if you look at what the Asian markets, whichever is trading right now, is doing rather well. The SGX Nifty, which is the other one which is open, is also showing an uptick of about 1/3%. So we might start off marginally higher, but essentially keep in mind the Nifty will start off slightly higher today, I would reckon, because of the positive sentiment across the world. Just one small political news, and important from an Indian perspective. I think a lot of people had spoken about how there's a body blow to India because US has decided to pull off troops from Afghanistan. I think Bloomberg News report stated that the White House has officially said that Trump has not ordered Afghan troop withdrawal. This is something that Bloomberg website reported. I think from an Indian perspective, is probably an important thing as well. But as I said, the markets look set for more gains. I don't want to dwell into what the option strategy, etc., is saying is the first day of or the second day of the new series today. So don't really want to dwell too much on that. Things could change in a matter of a few days. But suffice to say, we'll start off well. Question mark only is, what happens in a scenario like this? What happens to specific stocks? And are there pockets of strength or weakness that one should keep an eye out for? Well, I say there are 3 or 4 names which are very, very important to monitor today. Firstly, Marico. The MSP for copra has been hiked by more than 2,000 rupees per quintal for 2019. Ball copra also moves up quite substantially. This is Bloomberg News reporting, quoting All India Radio. But more importantly, because this has happened, and I remember a chat that we had with Shagata about 2 weeks back, wherein he had mentioned that at some point of time these prices will start moving up. I would presume that the markets would perceive this as a small negative or positive going away, and therefore there could be a reaction, a negative reaction on Marico. I wouldn't rule that out completely. OBC, and there could be a positive reaction because the government has conveyed the decision to invest about 5,500 crores in the bank by way of a preferential allotment. The meeting to consider the capital raise is on Jan 2, so do watch out for this one. Watch out for banks in general, and we'll tell you why in moments from now as well. But OBC could well have a positive reaction as well. Sanghi Industries, it's a interfund. It's a sell by somebody because of which Franklin Templeton is bought. But usually when Franklin Templeton MF buys, people take notice. It's a stock that's been beaten down quite considerably. They've bought in over 2% stake at about 59.5. Let's see if the markets cheer this move or no. couple of other stocks. One of them is Kotak Bank, an important one from a news perspective because the RBI deadline for Uday Kotak to cut stake expires today. Today is the deadline. We'll get into Vijay to talk about this as well. But do watch out for Kotak Bank, important monitorable. I don't know if it reacts at 9 a.m. today or not, but a stock that you certainly want to watch out for. Lastly, a stock that I haven't given to my producers, but watch out for JSW Energy. I think there's a note which says that merchant power rates have come off quite significantly, and that might not augur well for JSW Energy. The stock has been doing okay the last couple of days. Wouldn't be surprised if there is a bit of a pause if the market takes into account this note. 16.5 currently for JSW. Let's wait and watch what happens today. However, let's try and tell you now what are the stocks, or rather, I've already told you about the stocks. Let's tell you about the stories that are lined up on First Word today. Remember, it's a collection of the top editorial pieces that we believe we should bring to you. Banks, armed with an array of schemes, have seen an improvement in recovery, shows the latest RBI data. But what's the most effective one? Vishwanath Nair Johnson to talk about that. Amit Sarkar then takes us through how the Nifty and the broader markets have performed in 2018 thus far. Darshan then gets us what market experts are expecting in 2019. And then I just drew up what some of the world's largest money managers have to say for the new year, for the US markets predominantly, because that will move the global markets, but also emerging markets at large. Let's start though with the big news that came out post-Friday, market hours. The Insolvency and Bankruptcy Code has helped improve recovery and led to faster resolution according to the data done by the RBI. The banking regulator trend and progress of banking report ranks SARFAESI Act and the IBC route as the two most effective tools used by bankers. Vishwanath Nair now joins in for more on the data and what to make of it. Vishy, good morning.
Good morning, Neeraj. So the best two routes is fairly relative because the other routes that are available for banks are not really showing great results. So in totality, these various legal routes like IBC, SARFAESI, Lok Adalats, or even debt recovery tribunals, they aren't really bringing in the big numbers as to large value recoveries, but they are giving hope as to how recovery is going to pan out. Remember the year of assessment in 2017-18. So IBC's majority of IBC's big resolutions came only this financial year in FY19, which means that data will not account for it. But of course, the RBI in its assessment points out that IBC and SARFAESI, because of the recent change in SARFAESI, they've actually been able to bring in a lot of the recoveries, and they've been able to ensure that banks are able to improve their books through this recovery. But apart from these routes, the RBI also points out that within their own structures, within the banks themselves, they have internal recovery mechanisms which are now good enough so that they can improve their recovery in general. So 17-18 largely a year of good recoveries and resolutions for the banking system, especially the public sector banking system. FY19, the first half has not been very as good as what it was last year, but still things are looking better, and hopefully by the end of this year, by March, things should look better and the numbers should look big. That is what the RBI is saying in its report. It also points out that the kind of provisions that banks hold, especially public sector banks, is not enough to cover for any future losses, because there are plenty of NPAs which are yet unrecognized. Even after all this entire cycle of recognition, there's still unrecognized NPAs on bank books. The RBI says that because of which you need to have tougher capital norms. Tomorrow, if these NPAs play out and they start getting recognized, then banks will not be able to withstand that kind of pressure. Therefore, they need to have a good capital base, and that's why the RBI is insisting that banks should hold higher capital than what Basel III requires globally. So the major points about the banking system there. NBFC is one point that the RBI mentions. They did not talk about the crisis in the NBFC sector because the assessment year was only till September 2018. They're saying that they are going to come up with tougher ALM norms, asset liability mismatch norms, so that they can be closer to what banks are today. So that's it.
Interesting. Just a couple of questions. One, whether this number that has come out, 40 or 1,000 crores or whatever it is that, what are people saying? Is that, or what is your assessment? Is it a heartening number, or is it a number that was anticipated and has come in a tad too late?
Well, I can't really say about whether it was anticipated or not. I mean, but any kind of recovery, any kind of resolution is good for the banking system at this point in time.
That's true. No, but the number?
The number itself, I mean, sure, it was the initial period. Remember that this IBC only came up in late 2016, and it was only till June 2017 that the banks actually started using it more aggressively.
Got it.
So obviously, by the time the resolution happens, it will be the new financial year. So this year's assessment should show that big number that we're all expecting.
Okay, just a quick follow-up, Vishy. Kotak, big talking point today because of the deadline, but bit of a non-event, you would reckon?
Important thing, let me just clarify what this deadline is. So 31st December is when the RBI required that Uday Kotak and the rest of the promoters of Kotak Mahindra Bank bring down their stake to below 20%. The bank contends that it has done it through a non-preferential share route, but RBI says that it does not believe that that was adequate. So that's essentially the debate. They've gone to court. So in court, there was a debate whether 31st December, since the next hearing date is later in January, the Kotak lawyer said that, 31st December is coming up. We don't know if the RBI is going to take any action against us. In court, it was agreed upon that till this case is over, and since the debate of this court is also the court case is also about specifically this deadline. So unless that is over, the RBI won't take any action. The RBI lawyer said that the RBI is a mature institution. It knows when to act and when not to. So hopefully there won't be any events later today. But remember that Bandhan Bank has already faced something similar. They missed that deadline that was put on them to bring down promoter stake, and then the RBI put a ban on any future branch opening, which was later lifted. But of course, that's something that happens, and then it automatically means negative things for the stock. So we'll see what happens with Kotak, but hopefully there won't be any big news for the rest of the day.
Okay, Vishy, thanks for putting that into perspective. I think this clarity is important because you all read about, oh, there's a deadline today, but hey, there are these equations that have already shaped up, so might be a bit of a non-event, which is probably not bad news as well. You don't really want small things, or rather big things, but issues like these getting debated in public without knowing the full facts behind the case. The next piece on First Word. Global equities have had their fair share of excitement in 2018. Everybody knows that. It was all about the broader market back home in India, though. So while the Nifty may have posted gains of 3%, and frankly, in dollar terms, it's not even a gain. But the picture, any which ways, even in rupee terms, is very different for the mid-cap and the small-cap indices. Sumit Sarkar is here to take us through the changes. Sumit, good morning.
Good morning, Neeraj. So if you see, I'll start off with the main indices first. Now, if you see this chart that comes up first, you can clearly see how the gains in this market in 2018 was very selective. Only few stocks led the rally in the markets, and that is the reason why Nifty 50 is up around 3.1% in 2018, while the other broader market indices, that is Nifty 500, Nifty Mid Cap Index and the Nifty Small Cap Index, are down in the range of around 4 to 30% in 2018. Now, this sell-off in broader markets was led by various macro and micro concerns, which include the introduction of long-term capital gain tax, change in mutual fund classification, liquidity concerns around non-banking financial companies, weaker rupee, and higher crude oil prices and trade wars. Now let's see how the sectoral performance was in 2018. Now among the gainers, Nifty IT Index, now that gained nearly 23% because of rupee appreciation in 2018. But if we see at one point of time, this index was up as much as 40%, but post that it fell and it is now up around 23% in 2018. But it fell because rupee appreciated in the last 3 months of 2018, while concerns around growth slowdown in global market have increased in 2018. Nifty FMCG gained nearly 14%, clearly acted out as a defensive. This is the 10th consecutive years of gain for this index. Now Nifty Bank Index, now that gained close to 6%, mainly led by private banks, that is HDFC, Kotak Mahindra Bank and ICICI banks. They were the main gainers in the Nifty Bank Index. Now on the loser side, if you see Nifty Pharma Index, now that declined close to 8% because of the continued pricing pressure in the key market, that is US. Nifty Metal Index, now that declined 21% because of the weakness seen in major metal stocks, metal prices. Nifty Auto Index, now that fell 23%. This is the worst index performance since 2000, and that is because of slowdown in volumes, trade wars, higher crude prices and higher raw material prices. Nifty Media Index, now that declined nearly 26% so far in 2018, mainly led by Z Entertainment. Lastly, Nifty Realty Index, the worst sectoral performer, declined 33% in 2018 because of liquidity crunch and rising interest rate. But this 33% fall for the Nifty Realty Index is post 100% gain seen in 2017.
Okay, and what about the individual stocks in all of those respective indices, Sumit?
So if I'll start off with the Nifty 50 index, and if you see there, among the top 5 gainers, 3 are IT companies, that is Tech Mahindra, Infosys and TCS. As you can see here, Tech Mahindra, TCS and Infosys are the top are among the top 5 gainers, and that is because of rupee depreciation. As we know, Bajaj Finance, now that gained close to 50% because of a steady rise seen in its asset under management and because of its stable NPAs. Also HUL, now that gained 33% on the back of strong volume growth and because of the recent parents deal with GSK. And on the loser side, if you see Tata Motors, now that fell nearly 60% so far in 2018 because of concerns regarding its luxury unit, that is JLR. Yes Bank declined 42% as RBI denied extension for Rana Kapoor's term. Bharti Airtel, now that declined 40% because of continued pricing pressure in the telecom market and because of increasing debt. Vedanta, now that declined nearly 39.5% in 2018 because of the weakness seen in key metal prices and because of a shutdown of its copper unit. HPCL, that declined 39% because of the contracting marketing margins seen in 2018. Now on the mid-cap index, if you see, among the gainers, HEG, that is the most profitable graphite maker in India, now that gained 58% because of rising demand and prices of graphite. L&T Infotech gained 55% in 2018 because of strong fundamentals. Bata India, Indiabulls Ventures and Jubilant Foodworks were also among the top gainers, which gained close to 42 to 52% in 2018. Now among the losers, Vakrangri and PC Jeweler duo comes in, falling around 92% and 81% so far in 2018 because of corporate governance issue. Sun Pharma, Advanced Research, Reliance Capital and Dewan Housing, DHFL are also among the top losers, which fell close to 59 to 62% in 2018. Lastly, on the small cap side, if you see, among the gainers, NIT Tech gained 79% due to strong financial performance. VIP Industries gained 45% because of strong growth in margins, because of growing tourism and because of its increase in market share. On the loser side, Manpasan lost close to 78% because of corporate governance issue. Reliance Naval, JP Associate and Hindustan Construction declined somewhere close to 70% because of insolvency filings done in 2018.
Okay, so how different will 2019 be and what are the factors that one should watch out for? That's the key point. Sumit, thanks for bringing us this piece, but let's get in Darshan, because Bloomberg Quint has done a detailed poll amongst 24 market experts, and Darshan is here presenting the first of the 3-part breakup that we've done, starting with where the market experts expect to see the Nifty at the same time next year. Darshan.
Yeah, so basically the first part will deal with the Nifty and what happens, a little bit of politics. The second part probably will deal more with stocks. So what have you found out? Firstly, what's the Nifty range expected to be? So among the 24 participants that we asked them what range, and we didn't give them an option. We asked them for the range. So that's how pretty much the range is expected to be. Majority of them do expect that, and if you can have the graphics on, majority of them do expect that the Nifty will actually go in much higher this time around. That's the trend that they believe this time. So that's the proper trend that we're seeing on the Nifty itself. So as far as the Nifty is concerned, on the lower end of the market, 40% of them believe that it'll be between 10,500 to 11,000, while the majority of them do believe that it will be anywhere between 9,000 to 10,000 level. On the upper end of the market, majority of them do believe that it will be between the 11,000 level to the 12,000 level. So that means they expect the Nifty to be range bound, and they see a level of close to 12,000 and not going beyond that. That's what majority of the markets are looking at. That means a potential upside of, on the lower end, means a potential upside of 10% on the Nifty from the current level. So that's the Nifty for you. The other questions that we asked are basically related to a lot of politics. 3 questions in particular. First of all, what if Modi returns to power with an absolute majority? That was the first question. 10% do people believe that that the markets could fall, but majority of them believe that the gains could be anywhere between 5 to 10% for the market. So that's something that they believe, but nevertheless majority of the market participants believe that the markets will rally. The second question that we asked was what will happen if they come with the support of allies. So the NDA comes back to power, but it's not an absolute BJP majority. It will have to take support of the allies. Yet even here, majority of the participants do believe that it will be good for the markets. At 5 to 10% rally for the markets is something that they believe. Some do even believe that the gains could be in excess of 10%. 12.5% believe that the markets could fall beyond 5%. and 20%. So there are some people who do believe that the market could correct in case BJP don't get an absolute majority. And the third question is, what if Modi loses and on other front, probably a Congress or some other one. Basically the question is, if BJP does not come to the power, basically majority of them believe that the markets could fall. Up to 5% is where 37% believe, but there are some who believe even so it's divided between 5 to 10%, up to 5%, and over 10%. So majority of the people do believe that the markets could fall. So that's the important question. Some other questions that we asked: what's the big joker in the pack? Majority, a third of them believe that trade war could be the big joker in the pack. A lot of issues, participants also believe that crude could be a joker in the pack going ahead for the markets. And a couple of other questions that we asked are basically relating to Donald Trump also, whether Donald Trump is a worry for equities. Pretty much 42% majority of them do believe that the policies of Donald Trump could be a worry for the markets going ahead. 33% said they can't say, and 24% say that Donald Trump won't be a worry for the equity markets.
Okay, that's interesting. So, well, you got the reply of the money managers on one key question that I think the markets will attempt to answer in 2019, which is May 2019, which is what happens in terms of the election results. I think over the course of the next 2 days, Darshan will bring us what specific sectors and themes do market participants like, and if there are some key stocks that they believe are the common grounds between 25 or 30 odd market participants. So that's the Bloomberg Quint poll for what the markets, Indian markets, hold in store for 2019. While we are a day earlier, but hey, what are some of the biggest money managers across the world predicting for 2019? Well, it doesn't look like volatility is going out anytime soon, but not all are pointing at a gloomy picture. That's the thing. So I scanned the notes from a JP Morgan to a Macquarie to a Lazard to a Charles Schwab, and I've picked up 5 or 6 pieces which I thought were more pertinent. One from a US market perspective, because that's the mother market, and then the views that these guys have given on the emerging markets. There are a total of about 13 notes that I scanned all through yesterday. These are the top 5 or 6 pointers that I thought I should bring to you. Charles Schwab and Schwab investment team, essentially, which is a unit of Charles Schwab, is saying that US investors should be prepared for higher market volatility and possibly even a bear market in the coming year. This is important because if the US markets do enter a bear market, there are murmurs of this in coffee conversations. A lot of people will tell you, hey, maybe the US markets are already, we are already into a bear market, just that we don't realize it right now. But if indeed we see a bear market for the US, then I can stick my neck out and say that we will not have a great time in India as well, even though we may want to believe that we are decoupled, and maybe in 2019 we've been relatively decoupled. But the US is a bear market, then that's a problem for India as well. So that's the first thing that came in from Charles Schwab, an important point that I thought I should bring to you. Then JP Morgan Asset Management. This is not JP Morgan, the brokerage arm, but JP Morgan Asset Management. They are banking on valuations, and they say that while the checklist of concerns for the global economy remains long in 2019, it is important to note that valuations fell sharply in 2018 to reflect those concerns already. If economic growth picks up in Europe and Japan, and if Chinese growth finds a floor, and if the dollar weakens, international equities could rebound. I think a few assumptions out here and a few conditions set, but the dollar weakness is something that a lot of others have pointed out, and I'll get to that as well. But JP Morgan Asset Management believes that this could be one reason, and these could be a few factors that you should keep in mind while looking at 2019. And of course, they go out and say that patience has paid off for investors across the world as well, whether you look at valuations or otherwise. So there is that degree of one quality that all investors should have. We can just bring up that chart if we can and just show you what the chart is trying to say. And it shows that from an equity market's peak, 12 months prior to, or 18 months or 24 months prior to a bear market versus or the peak versus what happens later on. And if you can see 24 months post the peak, yes, you would see the markets come off, and this is done since 1945, by the way. But if you looked at the statistics, average statistics, the markets tend to recover, even if they were to fall quite precipitously in the 12-month period following the market peak. So this is something that everybody should keep in mind. We don't know if we have hit a peak right now for the US markets and the world markets or no, but even if that is the case, at some point of time the markets will recover, so patience would pay. BlackRock investment managers are saying on emerging markets, this is the view that I've gotten on the emerging markets, taken on the emerging markets, they are saying that emerging market assets have cheapened, offering better compensation for risk in 2019. They are cautiously positive on emerging market assets for 2019. Ties in with what JP Morgan also tried to say, that valuations are certain in your favor when it comes to emerging markets. Macquarie, of course, believes that it could be a year of contrarian investing. They say that 2018 was difficult after a strong 2017. Emerging markets were derailed by a strong dollar and the trade war. However, it is probable that we get back on track in 2019. Sentiment is very low, which is a signal, a buy signal for a contrarian investor. So they are essentially playing the contrarian game. They also believe that the market is still willing to pay much higher for growth as opposed to value. And they've taken 3 indices, which is the Russell 1000, the MSCI World ex-US, and the Russell 2000. And if you can see in the MSCI World ex-US, which is the 3rd and the 4th bar, and the Russell 2000, the 5th and the 6th bar, you will see that the median PEs until 2018 and the current PE, the growth stocks have a higher profile or a higher valuation multiple than the value stocks, which means that investors even now are willing to pay more for growth stocks and not value stocks. This is Macquarie's research, of course, and how they believe the game will be in 2019. They believe investors will continue to pay more for growth stocks. The last piece, and that's BNP Paribas. And again, as I said, one earlier house, which is, I think JP Morgan spoke about how the dollar weakness would be important. BNP Paribas has made it the central point for emerging markets. They say a fall in the dollar would clear the way for a rebound in emerging markets or emerging equities and the local currency fixed income in those equity markets. So their central theme for equity markets or the emerging equity markets is that a fall in dollar, if that comes about, would essentially pave the way for a rebound in emerging equities across. All of these are very large houses. They don't necessarily have India as the forefront of their reports, but clubbed in the emerging market opinion are also views on India. And hopefully this has helped you get a sense of what some of the largest money managers have in store or have it in their mind of what is in store for 2019. That's all that we have on First Word today, to be honest, but that's a lot more lined up on IndianOpen. Vijay Sales would be a happy retailer after the GST rate cut of 32-inch TV sets, but more importantly, how the festive season and how the holiday season is shaping up as well. The managing director, Nilesh Gupta, joins in to talk about that. We discuss the bidless outlook for Dhanuka Agritech as insufficient water for agriculture threatens to hurt margins. The managing director, MK Dhanuka, joins in to talk about that. But after this break, a full tilt towards the day's trade.
What will be my contribution to the world? I wonder. Will the things I created
pass the test of time?
or maybe they'll lay the foundation for something new? I hope my ideas survive.
I've had some great ones.
And there's still
So much left to do.
who knows what life will bring.
The road is long.
The journey full of promise.
The pursuit
Only just beginning. A series of exceptional stories about exceptional people whom time won't forget. Pursuits by Skoda. Coming soon on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back. You're watching Indian Open right here on Bloomberg Quint. Let's see how the Asian markets are faring at this point. Well, the one that is operational in the green will probably have a start which is marginally in the green for our markets as well. Do watch out for what we do. Also keep in mind the bond yields which had shot up in the sessions preceding this one might also cool off a little bit. So at that 7.39 or thereabouts for the bond yields. Let's see if they come off a little bit in the session today. However, what about equity markets? How has the start of the new series been? Let's take a look at the derivative space. Agam Akhili standing by with their FINA setup. Agam, good morning.
Good morning, Neeraj. Well, we've seen some strength come through in our own markets last week and Friday specifically. What we saw was indices advance. It was a new series. So we also saw a lot of accumulation in the Nifty where the open interest went up by 7% and the Nifty banking futures where we saw the OI rise by as much as 24%. Now, the volatility index, as one might expect, also came off by as much as 5% at around 15.3. Your open interest distribution picture right now showing you a lower end of the range at 10,500 with the maximum open interest in puts there. On the higher end, it is with the 11,200 call, but we do have considerable accumulation around the 11,000 call mark as well. In terms of changes in OI, it was the 11,200 call which did see the most amount of increase in OI, and of course we also saw accumulation coming around the 10,800 mark. But let's move in. I've spoken about the wicks. The Advani Power, of course, is one stock which is in the F&O ban. Among other variables, your Nifty put call ratio is at around 1.54. It remains largely unchanged despite the fact that we did see the advances in the indices. Nifty banking put call ratio at around 1.11 against 0.89. In terms of stocks, let's keep an eye on something like Aramco Cement and Berger Paints, along with Siemens, of course, which has been advancing and seeing a lot of strength. But in terms of unwinding, that's where you have a lot of activity. In fact, something like South Indian Bank, India Cement, CEAT, HPCL, all of them seen advances in trade, even as we see a decline in open interest, indicating short covering for a whole host of these stocks. So we'll be watching out for that, of course, and how the index pans out today, especially given the fact that we won't have participation from a lot of other global indices coming through.
Okay, Agam, we'll watch out for all of these. Thanks a lot for joining in and giving us that perspective. We'll speak to Agam very soon on the show as well, yet again. But let's welcome in our fundamental guest on the show, Avinash Gorakshakar. He's head of research at Joindre Capital Services with me in the studios. Avinash, good having you. Thanks so much for joining in.
Yeah.
How did you look at the news of the banking space the last 2 or 3 days? The recapitalization that went in for certain PSU banks, the RBI report which spoke about how banks have recovered some bit of money as well. And mind you, this is for the previous season. I mean, the current year's numbers probably even better. What did you make of all of this?
No, I think Neeraj, definitely this sounds definitely positive. I mean, a lot of recovery happening is definitely good news for PSU banks. And I think most of the banks have actually shown a decent uptick, following the recapitalization news flow. Our sense is that FY20 should be a lot better, hopefully, if asset quality subsides and we see a lot of recoveries now from the NCLT happening in the current financial year. That would obviously add to, the bottom lines of most of the frontline PSU banks like a Bank of Baroda or maybe an SBI, where a lot of money has actually remained unproductive in, bad assets. So overall, it seems to be a good picture, but I think overall, to see these numbers improve, we'll probably have to wait for FY20. FY19, maybe the third and the fourth quarter may still show a decent amount of asset quality, and we could possibly see some light at the end of the tunnel, from FY20 onwards.
Okay, what about these banks? I mean, United Bank, Tiny Toon got some amount, went up 9%. OBC is getting 5,500 crores or whatever, etc. What do you do with these names? Touch them at all?
No, I think Neeraj, as far as the smaller banks are concerned, especially United Bank, I would say that on a standalone basis, these are clear stretcher cases, and we could not possibly see a complete revival. Even in cases of a bank like Bank of Maharashtra, which has got some money from the big bank recap, I would believe that investors should now try to focus on the large cap names, especially the names where decent amount of scalability is possible, and these have got large geographical assets and where the asset quality is fairly under control. I wouldn't suggest getting into smaller PSU banks, because here re-rating would take a long time, and I think we don't know what is the kind of extent of damage which could possibly come in in the next 12 months.
You notice a blue chip name when you see the price movement in that name during difficult times. NBFCs, it was a very difficult period for NBFCs in at least the second half of 2018. Avinash, Gorakshakar, I was sorting out the names of the Nifty 500 names, stocks for the top gainers, YTD.
Yeah.
Bajaj Finance is on number 4 position. For that name, amidst all that happened in the NBFC space after ILNFS or around ILNFS, to emerge as the 4th best performer on the Nifty 500 tells you volumes about how markets perceive this name. The question is, after such a strong move in this year or the preceding 7 years, wherein it's clocked in a positive gain almost every single year, is the market too confident about this? Or is it that just that the quality is so good that people would not be disappointed if they invest afresh even now for 2019?
No, I think Neeraj, clearly management quality is the topmost consideration what market looks at in these kind of companies. And secondly, I think the latent appetite for growth is definitely evident. I would believe that maybe for a quarter or two there could be a little slowdown on the growth multiple, but otherwise speaking, there's a lot of latent demand in the consumer financing, consumer durable segment, and clearly companies which have got a strong balance sheet where the liquidity is good enough. I would believe that 2019 could be definitely be a good year. I mean, considering the fact that the ILFS issue is now behind, and most importantly, companies like Bajaj Finance have definitely a decent amount of, price correction from the top. That gives an opportunity for, long-term investors to enter in. Maybe in the next 12 months, it may not be possible to give a exact, price target, but definitely over the next 18 odd months, I think the balance sheet and the growth, headwinds are definitely visible.
Okay, let's wait and watch what happens there. A bunch of stocks in news aside of banks. There is Marico, there are other banks, and of course some brokerage notes that have come in. So let's get in our research team in our research huddle to talk about all of these key movers and shakers or potential movers and shakers in the session today. Nikki as well as Somit joining to talk about that. Good morning, both of you. Let's start off with the stocks in news first.
I'm going to start off with Marico, where the MSP for copra has been increased by as much as 2,000 per quintal for 2019, and with this the prices stand increased to 9,521 as compared to 7,500. Kotak Mahindra Bank, where RBI deadline for the bank to cut Uday Kotak's stake in the company expires today. Uday Kotak is expected to cut down his holding to 20% from current 30% by December 31st. We'll be also separately looking at Jet Airways, which is in talks with SBI for 1,500 crore loan. That's a PTI development that we're talking about this morning. Also, we're going to be looking at Asian Granito, where the promoter and the MD has been arrested by Directorate of Revenue Intelligence. But then the promoter right now is out on a bail, and this is with regards to the case which relates to an amount of around 3.5 crore. NLC India, which has commissioned a 1,000 megawatt thermal power project, which has been completed well ahead of the schedule. It's been completed in 4 months as against the target of 6 months, so it will start contributing to the revenues earlier than what the expectation was. Oriental Bank of Commerce and Bank of India, on back of that development where Government of India has decided to pump in around 5,500 crore in Oriental Bank of Commerce, and for Bank of India, the amount is to the tune of more than 10,000 odd crore.
Well, we'll watch out for some of these, OBC, BOA and a few others, though Avinash doesn't want to touch them. Somit, what do you have for us?
So a couple of brokerages that I have. First is on JSW Energy, where UBS has maintained its sell rating on the stock with a target price of around 68 rupees on JSW Energy. Now, according to the brokerage, the spot power rates have cooled down after spiking to an average of around 5.9 rupees per kilowatt hour in October 2018. Now, in the month of December, the spot rates have averaged around 3.3 rupees per kilowatt hour. Now, this fall in power spot rates amid higher fuel costs again will bring focus on JSW Energy's untied capacity, that is the unutilized capacities of this company. Now, lastly, it says that despite the stock has underperformed the broader markets in the last 10 months, the brokerage still believes that there's a further downside when it comes to JSW Energy, as the market is still not pricing in the medium-term volume and realization risk that comes in with JSW Energy. The second we have is on NCC, where Phillip Capital has maintained its buy rating on the stock with a target price of around 145. Now, according to the brokerage, the first half of financial year 2019 earnings of NCC represent the strong fundamentals of the company and reinforces the brokerage's view on its superior execution capabilities in the future. Now, year to date, if you see, NCC has seen strong order inflow and has a strong order book despite a slowdown seen in road and metro segments. Now, over the last 10 months also, if you see, the stock has corrected significantly on the back of macro concerns which are mostly related to the election coming up, and now this fall gives a right time for an investor to buy the stock, which has immense growth opportunity going forward, says the brokerage.
Okay, we will watch out for both of these and some key stocks in news. Thanks, Nikki and Somit, that. Avinash, I want to start off with the stock in news first, then we'll get to some brokerage notes as well. Marico has enjoyed the benefits of falling copra prices for some time now. There's a hike in MSP. Is this a big dent or something that can be absorbed?
I think, Neeraj, clearly, earlier, if I am not wrong, I think copra prices had corrected sharply and the company benefited, from this raw material cost reduction. I would believe that here in the near term there could be some margin pressure, but since the company has a decent amount of pricing power in most of its coconut oil products, especially the Parachute brand, I would not be surprised that they would be taking a price hike and actually neutralizing this cost impact. What kind of impact it has on its volumes is definitely an important issue, but I would believe 8 to 10% volume growth is something the management has hinted, and clearly despite the price increase, the stock may not react completely negatively on this news flow.
Just because I had the opportunity to speak to Shogata about a couple of weeks back, maybe a fortnight back, and I think this question about copra prices was obviously there. I think what he referred to was the point that the prices and the contracts have been entered into, I presume, for the near term. So even if copra prices were to shoot up sharply, there won't be too much of an impact in the near term. Over a 1 month period, does Marico have the pricing power to go in and hike prices? That's part one. Part two is that since Marico had already hiked some prices and the raw material cost had continued to fall, there was a small margin expansion of 50 basis points that Shogata believed they would get. Maybe that could go away. Will this be a big dent for margins? I think that's the question, and to that, I think if we hear out what Shogata said, there won't be. I think Avinash's belief is also that they have the pricing power to probably hike if there was some bit of margin dent coming in, and therefore we'll probably not see that. But in today's session, could we see a negative reaction? Sure, we could. Let's wait and watch if that is bought into. It's been a reasonably strong stock in the last 1 month, has been Marico, 378 and counting. Okay. Just one more piece of news before we move on to our technical experts, Avinash, and that is on JSW Energy. Now, the stock has been rock solid, yes, but I think a UBS note, if I'm not wrong, says that spot power prices and merchant power prices have come off quite rapidly, and that's not being factored in as yet into the valuations. Your sense?
I think, Neeraj, clearly, if the spot prices have come down and if there's a kind of repricing of the power tariff, definitely it could impact margins. And I think the stock has also run up from levels of around 45, 50 to 60 plus levels. So I think there could be a little bit of dent on the profitability, but overall how they manage to ensure that their tariffs are protected, I think would be a key factor to watch. Maybe the impact of this may not be immediately evident in the near quarter, but at least going forward, at least over the next 3 to 6 months, you could see a little bit of pricing pressure, and that possibly could be a little negative in the near term.
Okay, Avinash, stay on. Let's try and get in our technical experts on board to figure out what to make of trade today. Rahul Randeria, independent market expert, joins us right now on the show, as does Brijesh Bhatia, head of research at Dealmoney Securities. Gentlemen, both of you, good morning. Thanks for joining in. Rahul, let's start off with you. What should a trade be today? One is the direction call, yes, which I want from you, but what's the trade that you would enter today on the Nifty or the Nifty Bank?
Yeah, good morning, Neeraj. If you look at the last weekly candle, it has been a hammer formation with a very long shadow. So that means that undertone is very bullish. After a gap up opening, and as we have discussed earlier also, that market have tendency, to open with a gap up, consolidate, and again moves up. So definitely the bias would be positive, and today is the last day of the year. So definitely I am expecting market to close on a positive note. And for today, I feel that Nifty can test the levels of maybe 10,980, 10,1100, just almost too near to those levels, because previously it was just a major resistance. So definitely after opening with a positive gap, if there is any correction or any cool up for intraday, one should buy with a stop loss below 10,828. And on the upside, as I said, that I am expecting a target of 10,980 to 11,000. 11,000 being a psychological mark, there could be some sort of pressure at those levels. But definitely, I am expecting that 11,000 would also be taken out, and Nifty would inch out to the levels of 11,283 in the coming 4 to 6. Yes, definitely.
It'll open slightly higher. You'll still buy the Nifty today.
Yeah, but as I said, some sort of 30-40 points if cool off is there, because last 3 days we have seen.
If there's no cool off, then you will wait.
Then we have to see. We have wait for that. Wait and buy with a stop loss of days low.
Okay, so buy with a stop. If you want to buy with a stop loss of days low. Ideally, wait for a cool off. If you can wait for that one. Brijesh Bhatia, what would your thoughts be if somebody wants to trade the index, the Nifty or the Nifty Bank? Is there an option available when we start off, if we start off about 30 or 40 points higher?
Yeah, I would definitely go for long, even markets is starting slightly higher. Even if you look at the 11,000 call, I would slightly take a low risk buying options at 11,000 call. So if you look at the derivative structure, we are really witnessing that now the sentiments are towards 11,200, which if you look at the December series, whole 11,000 calls are holding the highest high. But though it is start of January series, early to say, but 11,000, the sentiment are clearly shifting to higher levels now. And on last Friday, we have seen 11,200 being aggressively returned. So clearly indicating that sentiments are slightly positive, and I would at the open go on the 11,000 call buy and expecting the target of around 180 to 200 on the upside, and one can keep a stop loss of 105, 110 on the downside.
Okay, so that's Brijesh's view. He's sounding a bit more bullish than Rahul is. Rahul is ideally waiting for a fall, intraday fall or a cool off. Brijesh is comfortable going out and buying at the current levels as well. So Brijesh, let me come to you first then. If that is the setup for the markets that you expect, what about specific stocks? What do you look to buy today or sell today?
Yeah, I would slightly look for a positional longs at current level. There are 2 stocks which is clearly giving good momentum and breaking out of its range. First is Bajaj Finance. So if you look at the financial space, this stock is strongly outperforming. Even if you look at the last 3 months momentum or performance against its peers, this stock is strongly outperforming and breaking out of its previous resistance zone. So at around 2634, I would go long for targets of around 2790 and keep a stop loss of around 2555. So that could be slightly a 1 week to 10 trading sessions trade. And second is Siemens. So if you look at the this infra space, this stock was underdog, and if you look at the recent momentum last week, it has formed since Feb 2018. This is the first time a stock has given a close about 200 days average on a weekly basis. So yes, momentum is strongly in the bullish side. Even if you look at the volumes, they are strongly picking up once the stock has breached around 1,000 levels now. So just keeping the stop loss slightly below 1,000 levels, I'm expecting the target of around 1184 on the stock, which is currently around 1043, and stop loss would be slightly 989, and I'm expecting for around 3 to 4 weeks momentum, and this is around 10-12% upside on the stock. So yes, Siemens is a good buy, keeping in mind the January expiry.
Interesting. Rahul, what about your strategies? I think you have an all-buy list too, starting with Sun Pharma, if I'm not wrong.
Yeah. Definitely, the whole pharma sector is in limelight. In last week, we have seen many stocks are showing some sort of strength at those levels and were supported with volumes. So definitely, first buy call is in Sun Pharma. Traders and swing traders and short-term traders can buy in the range of 425 to 419. Upside positional target 444, and one should place a stop loss below 415. My second buy call is in Reliance Infra. After a long consolidation yesterday, I mean to say Friday, stock has shown some sort of strength with a breakout. So definitely we could see an upside from the current levels. Traders can buy in the range of 312 to 307. Upside target 333 with a stop loss below 302.
Okay. So those are some specific ideas from our experts, and we'll discuss some more as well. We'll ask Brijesh about his call on the Nifty Bank too, but it's 8:50, that time of the show when we get our viewers our special segment Bloomberg Edge, wherein Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Yash, what's the stock on your radar today?
Morning, Neeraj. The stock we are tracking is Mahindra Holidays, and that one has crossed above the 21-day exponential moving average. Let's first try and understand what it is. So basically, the exponential moving average is a form of moving average which basically gives higher weights to the recent price moves. It is better suited for trending market as it smoothens out the adverse movement in prices. How do you? Let's coming back to the chart. And you'll see that the pink line over here, that is the 21-day exponential moving average. Now, for the last 5 trading sessions, the stock had been in a correction mode. It had fallen for the last 5 consecutive trading sessions. But yesterday, what we saw is that it managed to close 7% higher on the back of very heavy volumes. And post that, it has managed to cross above that 21-day exponential moving average. Now, the last time it managed to do so was towards the end of the month of October, and we saw a big bounce. So from the levels of about 220, it jumped all the way up to almost 260. So we could expect a bounce from these current levels.
Well, already has shown a bit of a bounce, as Yash said. But Yash, how well does this indicator work for Mahindra Holidays? How well has it worked in the past?
So in the last 1 year, all the 5 times that the indicator has turned positive, on an average, it would have given you positive returns of close to 4% in the next 10 trading sessions.
Wow. Okay. 4% after the indicator has already turned positive. Remember, the stock has gained a bit, but 4% on that. All the times that the indicator has worked, it has worked like a charm for Mahindra Holidays. Yash, thanks for putting that into perspective. Do watch out for Mahindra Holidays. Actually, both a fundamental and a technical call on this one too. Avinash, Mahindra Holidays, firstly, it's a stock that has kind of lost its mojo. Fundamentally, if there is a bounce, would it be a dead cat bounce, or are valuations well and truly in your favor?
No, I think from a longer term perspective, from the holiday share business, I would say, I would believe that, these levels are pretty attractive. Neeraj, the stock has corrected, after going ex bonus. And our sense is that, hopefully if the client additions in the current year are definitely much better than what they were in the last 6 months, that would be the near-term trigger. I think the markets were worried that fresh client additions in the past 2 quarters have not been up to expectations. Overall, the company has a very strong balance sheet, and the headroom for growth is definitely evident. They have been adding new properties, almost 8 to 10 properties every year. So I would believe that somebody who wants to take a longer-term call should definitely look at levels of around 190, 200 to actually accumulate.
Okay. Technically, Rahul, Mahindra Holidays?
Yeah, Neeraj, if you look at the price pattern on the daily and weekly charts, and even on the quarterly charts, the stock has seen a very significant price damage from the levels of 470. Just it took a pause around 190. Now after that, we have seen some sort of positive divergence on the oscillator front, which are the momentum indicators. And yesterday, Friday, we have seen it has an engulfing bullish pattern, which has covered almost last 10 to 12 trading sessions. So definitely some sort of accumulation could be seen in the stock. But as we have seen, the stock is a slow mover. So might be one can accumulate from the current levels. Stock could again, as Avinash said, that if stock can come around to 200, one can accumulate, and this is even the 208 is a right level, but one has to buy in a slow and staggered manner because the volumes are not that much encouraging. It will take some time, but definitely on the upside, if anybody wants to invest for them, maybe next 3 to 4 months, I'm expecting stock to test the levels of 235. So definitely from current levels to 200, one can accumulate, and the year's low, which is just below 190, should be placed as a stop loss.
Okay, for the benefit of viewers who are tuning in right now and missed first word in the session today, we spoke at length, or rather not at length, but spoke briefly, but in detail about the Kotak Bank issue. Now, I know the talk in town is that the deadline is today, but remember, if the conversations that happen in the court, and there is Kotak had filed something in the court against this ruling, and I think there is a judgment pending. And from what Vishy told us, that RBI, mature institution, I think the lawyers have said that they don't believe that there will be a backlash if the deadline expires today, because there's a pending court judgment on this. So it may well turn out to be a day of no event. Keep that at the back of your mind if you're indeed invested or looking to trade Kotak Bank. 1241 and counting on Kotak Bank. The last 1 month has seen a gain of about 7%. This is one important stock in news as well. The Asian Granito promoter and the MD was arrested but granted bail under income tax laws. I don't know if there's a big reaction on this one as well or no. And the two stocks, which is OBC and Bank of India, get some money, so do watch out for those names as well. Avinash, let's talk about some movers and shakers the last couple of days. Two names stand out, both in kind of consumption space, Avenue Supermarts and Symphony. Both of them had a really good run in Friday's session, and over the last few days have been very active. Let's start off with Avenue Supermarts. Should somebody or can somebody invest fresh money into this one?
Neeraj, I think somebody who puts money in Avenue Supermarts at the current level should actually have a time horizon of at least 2 to 3 years, because clearly valuations don't appear to be cheap. But yes, looking at the kind of numbers the company has generated, despite the fact that margins have come a little bit under pressure, the top line growth has been very strong, and I think this is going to continue. The company's strategy of pricing its products, at optimum prices, plus the strategy of having its owned kind of outlets, is definitely going to ensure that margins would obviously be sustained. And somebody who's looking at a portfolio kind of addition could definitely look at either buying now or maybe at a correction. But definitely this is a portfolio stock where over the next 2 to 3 years one could expect a significant upside.
Okay. What about Symphony? From those sub-1000 levels, it's bounced back remarkably strongly.
No, I think, Neeraj, clearly I would believe that the markets are now sensing that with a very cold winter, possibly summers could also be equally hot. And I think, since now the summer season is over, most of the business for Symphony actually materializes, from the April to May to June quarter. So I think clearly this is an indication that possibly, markets are looking at the fact that after a bad season last year, this season could be better, and whatever letdown happened in the last year could possibly be made out in this current year. So I would believe that, yes, somebody who's holding on to it should definitely hold on. Definitely this looks to be a good opportunity, but yes, I would believe it's better to wait for some visibility for more numbers to come in, and I would invest fresh if I were to invest as a fresh investor.
Okay, so that's the fundamental view out here. Brijesh, you want to come in on Symphony? It's been very choppy as a stock, but has trended higher in the last 25 odd sessions, if I'm not wrong. Is there a trade still existing here?
No, I would technically, if you look at the structure, I think positionally maybe around 1260, 1270 could be the momentum might take place. But positionally, no, I'm not looking for a bigger move on Symphony. So if you look at the fall, it has been slightly resisting around its gap level on positional chart. So no, for positional, no, for momentum, yes. Another 800 rupees could be seen when you want to play only a trading bet. Then one can keep a stop loss around 1141 and look for around 1260, 1270 on the upside on the Symphony. But if you look at the, we're discussing demarts and Symphony. Demarts look very promising for me if you look at the positional wise. I am expecting a target of around 1982 on the upside on demarts. So in case one can look for the positional stop loss around 7.5%, which is around 1525. If one can manage, one should aggressively look for long on demarts for around 1980 targets on the upside.
Okay, just a minute and a half left. Brijesh, maybe you want to slip in your call on the Nifty Bank as well. What should one do today?
Yeah, if you look at the Nifty Bank, I am just waiting for a momentum once it crossed the December expiry levels, which was around 26, around 240. So just slightly higher, 27,240. So slightly higher, I'm keeping around 27,319. In case that level is breached, I'm expecting the target of around 28,000 on Bank Nifty. So one should aggressively look for longer on Bank Nifty. Once the spot crosses about 27,319, levels. I'm just slightly expecting around 50-60 points higher from the Thursday expiry high level. So one can keep a stop loss of around 27,038 and look for 28,000 on the upside on Bank Nifty.
Okay, do watch out for the Nifty Bank as well. Less than 30 seconds to go for the markets to kick-start trade, and a bunch of stocks that we would be monitoring in the session today would include a Marico. As we said, it's a stock in news because MSP for Copra has been hiked. So do watch out for Marico. Do watch out for the PSU banks, OBC and BOI, because they're getting fresh money from the government, and therefore those stocks could react a little bit as well in the session today. And then watch out for Friday's gainers. We discussed Symphony, we discussed Avenue Supermarts, and we discussed Mahindra Holidays. These were amongst the top 3 names that were gaining in Friday's trade. There's not much on the Asian screen, to be honest. Most markets will be shut today and tomorrow. Whatever little is there is green. Hang Seng in particular is trading with a fair degree of green. We'll start off positively. The question mark only is, can we build on from there? And can we move up even further during the course of the session? Expect volumes to be a bit tepid. Start of the new series as well, so that's warranted. But here's how we're starting off. I don't know about 1.5% higher or no, but we'll start off marginally higher in trade today, I would reckon. Donald Trump has said that the conversations with China are moving on at a good pace and in a good way, and therefore that should be soothing for the world markets. We're starting off higher, about 35 points. Let's give these rates a chance to stabilize. Start off with Kotak Bank and see if there is any kind of reaction on that one, sentimental or otherwise. Shouldn't be. There may not be anything that could happen today, but Kotak Bank, being Kotak Bank, could see a reaction or two here and there. Yes Bank looks like starting off well. Bajaj Auto looks like starting off well. Tata Motors looks like starting off well. So there are 2 or 3 names which are looking fairly interesting. The HDFC Twins and HDFC Bank in particular at 2144 looks okay. Let's look for the newsmakers. So Marico, MSP for Copra hiked. Let's see bringing out a negative reaction on Marico. Nothing thus far. Let's wait and watch if it becomes a bit of a non-event. Bank of India, OBC, get fund infusion, and let's see if those two are reacting positively at all. Remember, the PSU banks and the small size ones have already had a bit of a rally, so don't quite know how much more can they do, but both of them starting off marginally higher in trade. I also want to take a look at what's happening to Avenue Supermarts. Big day in trade in Friday's session. For now, relatively unchanged. Should bring up the money markets, bring up the rupee, bring up the bond yields. Okay, Symphony is correcting a little bit in the session today. But the money markets, the bond yields and the rupee, 69.76, so some more strength into the rupee. That's a good move in today's session as well. It closed above 70 in Friday's trade any which ways. The bond yields had shot up a little bit in trade, and right now just about lying even, Steven. So no big crashes or otherwise, but that spike that we'd seen in the 10-year yields, I reckon on the fears of farm loan waivers being heightened, etc., we might see a cool off that. Actually, let's ask an expert. Let me not guess. K. Hariyar, head treasurer at First Rand Bank, joins us on the phone line from Mumbai. Hari, Neeraj here. Good morning. Thanks so much for joining us on Bloomberg Quint. Your thoughts, whether this move took you by surprise and whether it will cool off as quickly as it had spiked?
Hi, Neeraj. Good morning. Yeah, I think so. I think while the mood for the bond markets had looked a little bit negative from the morning, and that was clearly linked to the fact that the liquidity deficit in the marketplace had gone to about 1,85,000 crores, and that's not a very comfortable level. And you had crude, which was earlier looking to take out the $50 per barrel on the left, had actually started going up and was settling in the 54 odd levels. I think those two factors are troubling the markets quite a bit. And we also had, of course, the headline saying that the fiscal deficit so far has breached the 100 numbers. But most bond dealers know that also there's a large amount of disinvestment which is going to happen. And there was a clear commitment given by the finance ministry that 3.3% would be met. So that by itself wasn't, the reason. But the headlines that this could happen, a package might happen, obviously must have spooked the markets. My personal sense is looking at the rupee strength, looking at the fact that crude hasn't really overshot that 54 levels, looking at the fact that inflation still looks soft. Something like 740 looks like a buy level rather than a sell level. And they should come down. Having said that, we see a 7.25. I suspect not, because liquidity is the most important thing. So more than a rate cut, liquidity is more important. So the liquidity situation improves in the marketplace, then you could see the journey back to the 7.25. Otherwise, probably 730, 740 would be the range for now.
Okay, 730, 740. Hari, any surprises that could come about for the Indian money markets if indeed the trade tensions wear off quite considerably, if Donald Trump's tweet is to be believed, and it's very difficult to believe, but if that is to be believed, then things are moving ahead very, very smoothly.
Absolutely. So the tweet that he's given seems very, very positive because he's very optimistic of clinching a trade deal. So while it's not a direct pass-through into the bond market, it'll be an indirect pass-through, because if that were to happen, the first impact would be on the dollar index, which should go down, and the emerging market currencies, which should go up. You're already seeing the trend happening in the rupee, and that trend would continue. And hopefully when the rupee stabilizes, it's a very comforting factor for the FPIs to come into the markets, whether on the equity side or more importantly on the bond side, because they don't want to, with the gain in the carry trade, they don't want to lose on the currency. So I'm hoping that 2019 would be a year where the FPIs come back into the bond markets, because they've been absent from the bond markets in 2018. And while the numbers could not be very large, it'd be in the 75,000 crores to 1 lakh crore, but their presence is a very big thing. So if Trump and Xi Jinping come to an agreement, I think that will work through the dollar rupee into the bond markets, and that could be a decent trigger to take it to that 7.25 level.
Okay. We'll leave it at that, Hari. Thanks so much for taking the time out and joining us, and season's greetings to you and your team. Okay. That's the view on the bond markets. Hari believes that 730 to 730 to 7.40 would be an ideal band for the bond markets currently. Okay, now do we see the pre-open rate stabilizing a bit? Yes, surely we do. We probably will start off about 0.5% higher. Hindalco looks like starting off as one of the top gainers, Hindalco and Vedanta both. So the commodity names may start off well. HDFC Bank will continue to do well. And we probably will not have too many losers, save for NTPC, which too is down about 0.5%. Not that the gainers have big gains, but there's more green than red on the screen, which is actually a good sign. We spoke about Bajaj Finance fundamentally so much. How about the charts? Because it was a call given 2 days earlier, both FinServ and Finance, and I think they've inched up only higher. Rahul, would you bet on either of the names?
Yeah, if you look at Bajaj Finance, the setup is looking quite positive. The move has been slower from maybe last couple of months, but definitely stock is taking an attempt to inch the higher levels. It is moving in a maybe 45-degree angle and moving higher tops, higher bottoms. So current levels, I am expecting stock to test the levels of at least 2,780 in the next couple of trading sessions. So definitely swing traders can buy at current levels with a stop loss below 2,527 on the downside.
Okay, so do watch out for these names. So what else at the broader end of the spectrum? I think Shipping Corporation is looking like starting off okay. We don't have too many strong names in the gainers list on the Nifty 500. So MTNL, HDIL, Somani Ceramics, just the routine set of names. What is looking like doing well is Quest Corp. So that might start off, actually, even that slipped now. So nothing quite dramatic really. At the broader end of the spectrum, it's very few names which are doing rather well for themselves. So Avinash, Gorakshakar, if somebody wants to put in fresh money to work today or tomorrow, let's say the first day of the new year, I want to buy something, I want to make a safe investment, which I can hold for at least a year, and I'm not market cap agnostic. The last time that you were here with us, you spoke about a company called Rights.
Yeah.
Are you still betting on them, or have you found something between then and now where you'll be more comfortable putting fresh money to work?
Dheeraj, I think Rights continues to be attractive. I think current valuations trade around 15 times FY19 numbers, and I think looking at the kind of order book of 6,000 crores plus and plus asset light model, I would believe that this company, which enjoys EBITDA margins of almost 36% is definitely poised to get re-rated. But another company in the capital goods space which we have been recommending earlier has been Cummins. I think Cummins has shown a steady uptrend, and our sense is that FY20 should be a very strong year, considering the fact that both the management commentary and the operational numbers were very strong. So I would not be surprised we could see a 4-figure mark in the year 2019. And definitely, I think hopefully if the capital goods sector as a whole performs, then I think with the infrastructure growth and the kind of consumption seen in metros as well as other infrastructure pockets, I think Cummins definitely, even at the current odd levels, looks pretty attractive.
Interesting. Okay. What's the earnings growth that you're penciling in, Avinash?
As far as Cummins is concerned, we are looking at, for FY19 earnings growth of about 12 to 13%, but FY20 should be a much stronger year. We are looking at least 16 to 18% growth. And I think, this is one of those MNC companies, Neeraj, which actually has a very strong pocket in the higher HP segment. Clearly, there are no comparables here. And I think hopefully if the infrastructure, spending continues, plus we get better GDP numbers, I would not be surprised that after a very, brief period of lull over the last, say, couple of years when the company actually did not perform that well, FY20 could be a kind of year where possibly, some sort of big operational improvement could come in.
Avinash, do you track Prakash Industries at all? There are a lot of queries that come around that stock.
In fact, Neeraj, we don't track it, but I think, this company has been underperforming for the simple reason that there has been, some corporate governance issues. Plus, the fact is that fundamentally, although the numbers have been good, I think still, the comfort from large as well as the bigger HNI investors is not coming. I would believe that, it's better to stay away from these companies. If at all one wants to invest in steel companies, there are better quality choices available.
Okay, we'll get in the name in just moments from now because it's just minutes away from market open and need to tell our viewers all that they need to know to stay in trade today. So here's all you need to know. First up, RBI's annual trends and progress report of banking in India says current provisioning is not enough to cover potential losses by Indian banks. The RBI deadline for Kotak Mahindra Bank to cut Uday Kotak's holding expires today may turn out to be a non-event. Asian Granito's promoter and managing director has been arrested by Directorate of Revenue Intelligence over a case related to a sum of 3.5 crore rupees. The stock looks like starting off 12.5% lower today. Regulatory cheer for Zydus Cadila as the drug maker gets the final US FDA approval to sell an anti-acne medication. In key brokerage calls, Phillip Capital sees a 68% upside in Nagarjuna Construction Company or NCC, is saying that the company has a strong order inflow and order book despite slowdown in road and metro segments. And do watch out for Marico as the minimum support price for copra has been hiked by over 27% to 9521 rupees per quintal. This for the ball copra. Okay, so a few stocks that you need to monitor in the session today. Quick thought, Avinash, since you're referring to a steel company that are better steel stocks available, any name?
I would believe that, I think JSW Steel looks quite good. In fact, if one were to look at the operational performance in the last 2 quarters, I would sense that we could see a good upside, over the next, say, 12 to 18 months. We have seen a decent amount of volume growth increase, plus some more incremental capacities are being lined up. So I think, Neeraj, this could be a good stock to look at. And obviously, this is a well-owned institutional as well as an HNI stock. I would believe that this could possibly be a good bet, at the current odd levels.
Okay. Just a quick thought out here, Brijesh. Adani ports, we're looking at the rollover positions, etc. They all look very, very strong. High rolls, OI build up, and the stock has moved up as well. Is there more in store today or over the next few days?
Yeah, definitely. If you look at the ports, we have seen consistently long build-up coming in the December series. Rolls have been quite strong, the higher levels. So it's clearly indicating long build-up has been rolled as stock has seen a strong upside momentum. And I think 420 to 425 cannot be ruled out in January's series also. But I would, taking a new bet, if one is long, can continue to hold. But taking a new bet, I think 378, 379 could be a better level to look on a long side, fresh long, keeping a stop loss around 372, and targets could be 420 to 425 on the upside for ports.
Okay, metals might have a good start to the trading day today. Avinash was speaking about it. Hindalco and Tata Steel look like starting off on a really good note. Rahul Randeria, quick 30-second view. Hindalco, Tata Steel, Vedanta, 3 of the top 4 gainers today on the Nifty. Is there a trade in any of them?
Yeah, definitely. Tata Steel in the last 3 trading sessions, the candle formation has been of almost equal size. So definitely, the downfall has started getting exhausted, and we feel that it could shoot up from the current levels. So current traders can buy Tata Steel at 512 to 506, and with a stop loss below 500. Positionally, I feel that the stock can test the levels of 553. So definitely, positionally, for positional and swing traders, Tata Steel seems to be looking good.
Okay. Avinash, on that note, of course, we'll first take a moment to thank you for joining in today and wish you a very happy 2019. Look forward to have you more often here.
Yes. Thank you, and same to you and your team.
Thanks, Avinash. With your recommendations, I'm sure a lot of our viewers will certainly have a good 2019 as well. Okay, less than a minute left for the markets to kickstart trade, so it's a good time to get in the top calls from our experts. Brijesh, to you first, your top trading idea for the day today.
Apart from the Siemens and Bajaj Finance we discussed, I think one can look for intraday on Indigo, which is currently around 1175, and keep a stop loss of 1155. Intraday momentum can be around 1200 levels, could be seen on Indigo. So purely intraday play, stop loss would be 1155, and target would be around 1200, 1205 on the upside.
Rahul, what about you? Your top call for the day today?
Me, for day trading today, I'm liking ICICI Bank. Current traders can buy at current levels with a stop loss below 355. Stock can test the levels of 370.
Okay, Rahul Randeria, we'll let you go on that note. Thank you so much for joining in and wish you a great 2019. Brijesh, just stay on. We'll just take in a quick opening thought from you post-market open. But here's how the markets are starting off in the session today. The last day of 2018 and what's been a very volatile year, but we're starting off on a good note, which is not a bad sign. The mid caps and the small caps, I would reckon, would also start off with a bit of green. So not a bad start for the Nifty mid cap and the BSE small cap indices as well. Bring up the heat map, and again, no surprises, hardly any losers. That's the first key point. A lot of green on the screen. And now let's see what's moving. So with Hindalco, Vedanta, Tata Steel, you have a lot of commodity names which are doing rather well for themselves. There's some gains in JSW Steel as well. So metals, out and out winners for now. Let's wait and watch. I don't know. I'm guessing all of this has got to do with sentiment created yesterday with a single tweet of Donald Trump. Indiabulls Housing up about 1.5%. Tata Motors up about 1%. Z up about 1%. And I think this stock has had a really steady move the last few days, I must say. Bajaj Finance, another 1% higher, so not a bad start. Maruti about 1% higher. But a fair degree of green on the screen is the point that I'm trying to make. Selectively, select banks are also starting off well, but it's got to do with metals by and large. Metal counters are the ones which are really doing well for themselves in the session today. What about specific pockets of news which are moving around in the session? And are they moving around? So firstly, Marico is the first one that should come up on your screen, and let's see if it's reacting. The MSP for Copra is raised. No surprise that Marico is starting off lower. Not a big crack, but correcting nevertheless. What about the banks which have gotten some additional fund infusion? No big reaction in these either. Well, let's see if yesterday's or Friday's top movers have some reaction to themselves or no. These are all the top movers in Friday's session. Symphony starts off lower. Mahindra Holidays marginally higher. Avenue Supermarts about marginally higher, but Symphony starts off lower. So again, and that pocket as well, it's not been a really great start for stocks. So very muted, at least on the broader end of the spectrum. The Nifty dominated by metals. That brings us to the key question, Brijesh. Both the Nifty and the Nifty Bank have started off well. Would you initiate a fresh long at these levels, or would you wait for an intraday pullback?
Yeah, one can look at buying 11,000 call as we discussed. That sentiments are clearly now shifting towards 11,200 for the January series. So one can look for a buy at around 155 or maybe around dip towards 148. And for purely intraday based, keep a stop loss of around 121 now, and can expect levels of around 200 on the upside purely on intraday basis.
Okay, using options. Fair call. Brijesh, any stock that stands out? You've already given us a list of stocks that one should buy into, but post-market open, if there is anything that pops up on your screen.
I think if you look at the Coromandel, we've already seen last week gaining a good momentum in Friday's session, and today also starting on the good positive momentum. So at around 450, one can keep a stop loss of around 441 and could expect around 470, 475, maybe in a couple of trading sessions. Could be a good bet to go long on Coromandel.
Okay. We'll leave it at that. Brijesh, thanks much for taking the time out and joining us today and giving us that perspective. Really appreciate your time. That's the view from Brijesh, Bhatia of Dealmoney Securities as well. So some technical names to watch out for in trade. But fundamentally, what should you be doing as 2018 draws to a close? A very special voice, Pashupati Advani, founder at Global Foray, joins us right now on the show. Years of experience. Pashupati, let's put them to good use. Thank you so much for joining in today. Appreciate your time. Yeah. And in advance, wish you a great 2019.
Likewise. Okay. Yeah. It's always a pleasure to be here.
Would it be a better 2019, Pashupati? As 2018 ends, how are the odds stacked up?
Well, it looks obviously that there's quite a bit of uncertainty, which is always interesting for market players because it means that there are buyers and sellers at every levels. We just, this last week, for example, we looked at a nosedive, then we turned around and we looked at what is known as the Santa Claus effect, and now we're waiting to see whether we get the January effect at all.
What would the January effect be?
Well, normally I think in 8 out of the last 10 years, it's been a good January because money comes into India. This year I think it's going to be not so great as before because I think that we have been lucky because of low oil prices, but I think there's a lot of turmoil happening globally. It's not hit us yet, but I think that there has to be some overflow that is going to hit us, and so far it's not seen a lot of outflows. I mean, we still have a net inflow for the year, but I think that it could actually happen that money will get pulled back to other areas as assets there get cheaper and cheaper, and that's what it looks like.
Interesting. Pashupati, not from a perspective of the people who seek your advice, but for your own portfolio, and you run a very large portfolio as well, I'm sure. What are you looking at doing as, I mean, hypothetically, if you had fresh money, or even if you wanted to realign your portfolio in 2019, would you bet on value? Would you bet on growth? Would you do a mixture? Would you look at the beaten on contrarian names? What are you doing?
See, one thing is that the big names, okay, seem to be holding up quite well because the Nifty Sensex are at highs, so they're not at the all-time high, but they're certainly higher. But net for the year, they're not really up a lot. So I mean, I think they started maybe 3 to 5%.
Yeah, 3% higher.
Yeah, so I'm saying 5 because it might go up about one today. So so I think that that's one side. But obviously there are companies that supply these people. There are companies that do business with these people, and find those. A lot of that has come into private equity money as they're consolidating. But again, there are some public companies out there that have value, have decent promoters who are trying, and hopefully with the banks being able to lend, those guys will be able to give growth. However, if the banks stop lending or there's another jhatka in the bank system, then there's going to be a lot of trouble, and I think that's what the concern is because I believe that the government has done whatever they can to stop the bleeding right now, but then if it bleeds again, what happens? So it's like one of those, and it could bleed because there could be another disaster waiting to happen. We never know.
What's your view on Kotak?
See, Kotak is extremely well-run bank.
But this whole, I mean, while today a lot of people are fearful of a deadline which may not turn out to be anything because I think there is a matter pending in court.
Yeah, so I think he's bought himself time. There's been some articles around that say that he asked politely and when he was denied, finally went to court. But I think the courts will definitely give him some protection. Whether it'll give him protection past March 2019 or not. But what it may do is provoke him into making some kind of an acquisition which will dilute his stake anyway, and I think that may happen, and maybe an NBFC rather than a bank. But just so that he gets his dilution down. It could be a small NBFC, but obviously there is pressure, and the question is he going to be able to withstand that pressure? Probably not, because the rules have been written. And for him to change the rules, it's going to be difficult. He may buy himself some more time, which would be probably better. And there was also rumors around that Berkshire Hathaway was going to buy into the stock. So, that's always a possibility. You never know, though it's very unlikely at these kind of values.
So, are these conversations that happen amongst the HNI community of South Bombay, Pashupati, about Uday Kotak buying into an NBFC and not a bank, etc.?
No, but he has to do something to devalue. It doesn't make sense for him to have a secondary offering at this price. I think it's better for him to dilute his stake by buying an asset which he can then, convert and get a higher PE out of it. I mean, simply if he buys another financial institution at a lower PE, it makes business sense for him. And he's a businessman first and a banker second. Let's be very clear about that.
Okay. Fair call. And a lot of sectors that we want to talk about. We'll probably talk about liquor. We'll talk about what's happening in the agrochemical space, etc. and all. But Pashupati, firstly, are you taking any contrarian bets right now?
Well, yes and no. I mean, it's we've laughed
on themes, not necessarily on stock.
No, I know, but we laughed in the past about me buying JP, but it's back at that kind of level again. So
Oh, but you made money then.
Yeah, but I'm saying that it's now back at 7+. So I'm watching it. I think that that may be an interesting opportunity because they still seem to be doing okay. And they still, though they have debt, they've been stripping and selling assets. But the jewels are gone, but they have other assets to sell. But I think that there are opportunities like that where there are company promoters who are trying to stay afloat, stay in the game, and those are the ones that we need to find. Now, what I'm not happy about is, for example, the auto industry. I think auto sales are going to go down. They've already started to slow down, and also that's also prime target for NBFCs to lend. So that's another reason why auto sales have not taken up. Two-wheeler sales seem to be okay, but auto sales are not. But the thing is, the suppliers to auto sales should be doing well, but actually, and are doing well in the stock market, but those, according to me, are not the right place to be. So, obviously, I feel that the infrastructure spend is going to continue. I think that cement companies are going to continue to do well. Mid-cap cement is obviously a place for consolidation. There's a rumor going around about Sanghi Industries also, something is going on. So, there are people looking to buy the smaller players. So, like that, you have to find situations like that. In mid-cap pharma, it's the same story. The US FDA and the European FDA have put a lot of strictures on the large guys, and they've all cleaned up. The mid-cap people have not cleaned up as much, but can learn from the large guys, and they're trading at a much lower PE. So those are the opportunities, whether it's generic or specialty drugs, or even going back to the old ones of molecules and the research model. But those all have to be revisited, and you will find the jewels, because there are companies out there with good promoters who are in good businesses, but just are currently constrained for working capital to grow, and that'll change. That has to change. Otherwise, we're in deep trouble.
Okay, Pashupati, you got like years and years of experience. What does your gut tell you about the themes which are perennially the favorites, but don't seem to be doing well? I'll give you an example. The liquor space, right? When Diageo bought into United Spirits, everybody thought that, oh, now the actual declaration of sales and revenues will happen, global best practices come into play, and they'll be able to really take McDowell or United Spirits way higher. That hasn't quite happened. United Spirits, it has maintained leadership, etc. The stock is not given the kind of returns that probably some people anticipated. And the smaller names, save for Radico Khaitan, have all been kind of, here and there. I mean, the Som Distilleries, Global Spirits, etc., all kind of riffraff in terms of stock market returns. What happens in this space?
Well, what has happened is that, I guess they're still figuring out. First of all, I believe liquor consumption, hard liquor consumption is going down in this country.
Going down?
I feel so. But it's because it's shifting to cheaper liquor. And cheaper liquor is not Diageo. So, that is one thing. So, you mentioned the other names. They're making cheaper liquor, including, some varieties of country. So, country has always been the place where the money has been really made. And Diageo is not in that space at all. So I think that is one thing. The second thing is that there is huge compliance and GST on a company like Diageo, and also it's very difficult. I mean, according to me, they're still probably stock taking because they really don't know what's out there. And so, but as I believe that there are these companies, they're trying to bring new brands, they're trying to reinvent themselves, but they're still looking at they're hoping that India goes from $3,000 a year per capita income to $5,000, and then the fun will start. But it hasn't happened yet. We are at the tipping point. We haven't tipped yet. If we tip, it's going to be great for the country. I mean, you see what's happening in China. China is at about 7,500 per capita, and they're spending like there's no tomorrow. Literally. It's a local spending, but it's spending like it's no tomorrow. We haven't quite got there. We are there in a select group, but we've got young people, we've got obviously white goods, but after the white goods and the housing is bought, then then they buy liquor, right? Once they settle down.
But it's not happening. It's not showing in the stock price.
It's not showing in the stock price, obviously.
Will it?
Again, because liquor and cigarettes, even ITC you look at, it's not done so well.
Yeah, but there the duties kind of come in and
duties are there on liquor also, no? So, and plus there's a challenge of there is the inherent risk in the liquor business that states have been able to shut liquor down. And I think that's the big worry, based on where their plants are, whether
So you're not buying them?
No, I don't think that they're.
Do you own any of the? I mean, I don't want to get into names, but do you own any of the liquor names?
I don't own any of the liquor names. So.
Okay.
But I was in and out, but I haven't owned for a while because I think that, as I said, there is a systematic. It's like, why would you buy a casino in US knowing that a state could decide tomorrow not to have casinos anymore. Okay, so that's, or somebody's got a single facility and they shut casinos in that state, or that Indian reservation changes. The same thing, liquor. You saw what happened in Bihar. The reason why Globus has come up, for example, is because they had a big facility in Bihar, and Bihar seems to be allowing them to at least manufacture again, maybe not to sell, but because they need the jobs. People are out on the road and they want to, at the end of it all, it's job creation.
Yeah. Okay. So that's Globus Spirits, and I mean essentially the view on the liquor space. Please don't take this stock by stock. This is more a view on the space. Pashupati, I don't want to get into a specific stock name in your portfolio, but what is the biggest weightage in your portfolio? And don't tell me the stock, but tell me about the theme and why is it that has so much of weightage in your portfolio?
See, I am a long-term believer in the financials. So I've got a mix of financials. They haven't done so well right now, but they're sort of beginning to stabilize again. I've got the bigger ones rather than the smaller ones. So I have some position in the twins, for example. So that's held up, but a lot of the others have fallen off the charts. So I actually believe that the financial is a proxy for growth in India. And if we get the growth that is promised, whether it's 7 or 8%, then those are the companies that need to be there. There have been loan losses, and those are being taken care of. But the newer players are not as likely to have the what I call legacy losses. So I think that is where the benefit is. So you need to be in an NBFC that's been around between 5 and 10 years, where they've I missed Kotak. I'm sorry about it, but that's one of the things. That would have been the perfect place to be. I mean, it's given tremendous growth.
You're a believer in the NBFC growth story even now?
Yeah, I believe so, but I think it's going to take time. I think it's going to take 3-4 years. I also have some pharma stocks, and which I've had an up and down. Again,
but that's very specialized. That, because you can understand the space. Maybe you can kind of bet on the right pocket. Maybe a lot of our viewers cannot. So something else that is more generic in nature. Not a stock again, but a theme. Your top theme, which has got large weightage.
I honestly believe the logistics is good. So I think that as things get more organized, the logistics players, which a lot of whom are listed, that's another space that I'm comfortable with. Again, there are good players and bad players. The last mile is still a mess. PE money is coming into the last mile, which is delivery from the warehouse to the actual customer. But I think that there are others that, in the actual transport of, trucks and warehouses and things like that, their life has actually been made simpler by GST. They don't have to stop at every border and pay taxes. So, or do some jugglery in their books to manage. Now it's all open. So the transit times have become better, and their life is a lot better for them. And I think that will show. It'll take time to show, but it's not showing. It's not showing yet, but it will show. So I think that's the space also to be.
Okay. On that note, Pashupati, Advani, really special having you today. Thank you so much for taking the time out, and have a great 2019.
You too, and I hope that 2019 is better than 18, though according to me, it's probably going to be much of the same, at least for the next 6 months till the elections.
Okay, let's wait and watch. That's great advice to end the show with as well. Maybe till the elections, we'll probably have a very muted and lackluster 2019. Maybe things spice up post that. But Pashupati, great having you. Thanks much for joining in.
Thank you.
All right, and viewers, we take a break on the note that the markets have cooled off quite like completely cooled off. We're now just about 0.1 or 0.2% higher in the green. Let's take a break. On the other side, will Vijay Sales be a happy retailer because of what the October, November, December quarter has been and the GST cuts on select pockets? We get in Nilesh Gupta to talk about that, and then discuss Dhanuka Agritech. Insufficient water for agriculture threatens to hurt margins. How's the quarter been like? The Managing Director MK Dhanuka joins in to speak about that.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out there.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Okay, back with Indian Open right here on Bloomberg Quint. As we said before the break, the markets have cooled off. So we started off 0.5% higher, but now we're just about 0.1, 0.2%. Okay, 0.2% in the green. But it'll probably be a day which will be characterized by lower volumes, and therefore don't quite look at the dips and the gains today and tomorrow. It will be a low volume day for sure. But the year's been like that too for the markets and for consumer durables, because it's not been the best of years, frankly, with sales tapering at most periods in the year. GST Council, though, tried to do its bit for the companies and the retailers as a whole by lowering the tax slab on select products like televisions, for example, up to 32 inches to 18% from 28%, and a few other products. Has that spurred some bit of sales in this festive season thus far, and will 2019 look any better? Let's find out from a voice who you see quite often now on Bloomberg Quint. Thankfully finds the time to come to the studios. Nilesh Gupta, Managing Director at Vijay Sales, with us. So, Nilesh, so good having you. Thanks again. Thanks for joining in. By the way, I was on a small holiday. Lots of messages about the clothing brands giving out discounts by the dozens. Has it happened in the consumer durable space as well? I don't quite know about it right now.
I think consumer durable gives discounts 12 months. No, but jokes apart, I think pricing wise, from discount perspective, I think because of the online and the competition in offline, I think consumers are having a real good time as far as buying consumer durables are concerned, because they are getting the lowest prices. When you compare with last year, especially on panels, OLED televisions and all, I think from discount perspective, there's no dearth of discounts in our industry.
Okay. I remember the last conversation that we had was again on some move that the government and GST Council had done. There's some further moves that have happened in the recent past as well, about 7-8 days ago. How constructive would these be, if at all?
It's a move which is in the right direction. Getting products from 28 to 18 degrees bracket, 18% brackets, it's a correct move. But only thing is it's happening a little slowly. Like this time in LED televisions, we expected it across the spectrum. Okay. Maybe they may not do it 28 to 18% on super premium 2 lakh and above televisions, saying that it's a luxury item. But at least up to that level, 43, basic 55, they should have got it. And I think in the next GST Council, that's expected. So it's a very positive move, because at the end of the day, and coupled with that, the fact that now the rupee is also strengthening. So that's also going to set up a positive sentiment among the consumers. So I think we are going in the right direction.
Okay. How has this quarter been thus far, Nilesh?
This quarter is a mixed bag. We had a reasonably okay Diwali. I would not call it a good Diwali. We expected around 8 to 10% growth, but we ended up around just a low single digit growth.
Oh, okay.
And December has not been a great month, which is a very big surprise, because there were no changes which happened where December should have been a poor month. So maybe in anticipation, people have not been buying, or actually it's out of our mind. We are not able to put a reason to it. Okay, what's the cause for the low month? But we expect a better next year overall. For the simple reason is the rupee seems to be stable now. In fact, it's getting stronger, not only stable, it's getting stronger. The crude oil prices are not going up, they are coming down. And I've always been saying one thing, that consumer durable industry is only based on sentiments. Because we are not in a segment where people will think twice buying a television or a refrigerator or air conditioner. 20 to 50,000 rupees products average pricing is there. And that too 60-70% is going on a EMI basis. So it's only upon sentiments. And I think if the oil remains steady, the dollar remains steady in the coming year, I think the sentiment will only go up and we should have a reasonably good year, at least a better year than this year.
Okay. Wow, 2-3 frequent indicator points from you. So if Diwali was the first point, if Diwali wasn't great and if December hasn't quite turned out to be as good a December as usually is it across the brands and across products, say for maybe cell phones, because I keep on hearing you saying that cell phones are a different breed altogether, but the other products, has it been a marked slowdown across products?
Yes, there's been a marked slowdown across products. In fact, the footfalls have gone down. So that is something which we are not able to pinpoint. What is the reason? Because nothing changed. It's not that the taxation went up, prices went up, or the industry remained the same.
And it's not that online sales have increased.
No, even online is struggling. What I get to gather from the brands, December, even the online has been struggling a lot. So ultimately, and it's a very big surprise. How come all the consumers decide to slow down their purchase and all of a sudden they decide, let's go together and buy together? It always happens. They just move together.
Okay, interesting. That was one. Two, what did you make of this recent regulation regarding online? You know, this whole changes that have happened. I mean, Amazon India and Flipkart have said that they will, revisit, they will open dialogue, whatever, etc. But how big a shift can such a move bring about from online to offline?
See, what I feel is the regulation which we have been reading in the paper which has come, it's not only regulation, it's also how much are these online players going to play with the regulations. Because see, what is the regulation they are saying? What is the government saying? Okay, if you have a stake in your holding company, then that holding company cannot sell on your platform. I think the holding companies who are being held by people who have a lot of money, they'll remove the stake, or they'll create a new company and then sell it. Then they're talking you cannot have an exclusive model with you. It should be there on offline also. So boss, I can give in Joindre Talaya one dealer model, and I can give in such small pockets across the country one model and say I'm no longer exclusive. So it's not the regulation, it's the spirit with which the things are going to move. So they will always find a loophole if they want to. And secondly, what I feel is, like, I'll give you another example. Day before yesterday, there was a report that all the online video platforms like Netflix and all, they're thinking of doing self-censorship. If you see all the programs which are being made for India, they're very good programs. Content is very good. But somewhere or the other, there is a content which is not so much suited for the Indian sensibilities. And so even I was surprised when I was seeing, because there are some programs which are so good, but you cannot see it with the family. True. I was saying that, how come it's passed through the censor? Then I realized there's no censorship for on the OTT platform. Now, day before yesterday, there was a news that they're thinking of doing self-censorship. I think that's the right positive mood, because if they will not do it and they'll exceed it, then government will step in. Same thing holds true for the online also. I think they're pushing the discount part too much because of the internal competition between the two major guys. They are just pushing the price down. If they maintain that, see, there is no doubt about it, online is a platform which is here to stay. It's in the interest of the consumers. A consumer who wants convenience will buy online. A consumer who wants a touch and feel will buy offline. So both are here to stay. But if somebody is trying to trample upon somebody else, that is when the government will step in. So I think the ideal situation should be, rather than getting notifications and regulations from the company, if they become self-regulatory and do the things in the right perspective. Okay, they may not grow overnight, but on a long-term perspective, it's a market to be stayed over here. So let's see how it shapes up. But yes, the government is trying to do it. How far it will succeed, nobody knows.
Okay, interesting. And the third point, which I wanted to get a sense from you is, you mentioned that how EMIs are the backbone of purchasing any of these. in the aftermath of the IL&FS crisis, have there been any kind of liquidity issues for consumer finance? I mean, if we hear, I think it's all as smooth as before. But do you sense the same, or has there been a subtle or a specific change in the availability of consumer financing for products?
No. There is no change at all. For the simple reason is, today in consumer durable financing, all the big guns are there. You have Bajaj, which is so strong. He's holding nearly 60 to 70% of the market. ICICI has come in, HDFC has come in, HDB, which is an arm of HDFC, has come in. So all, Kotak has come in. So all are big guns. So there's no liquidity crisis at all. Only I think the issue which started, we faced slightly was, and that also was from convenience perspective, was when Aadhaar was not allowed to be used, which they had started using it. So it was very convenient for the customer that if he has an Aadhaar card, so it gets linked and the approval happens instantly. I think the moment they delinked, these finance companies cannot use the Aadhaar facility. So the delay is happening, is taking around 10 to 15 minutes for the approvals to happen.
Okay.
So I think that's the only thing. Otherwise, from fund perspective, there's no change at all.
Okay, my last question, and you may choose not to answer it, or you may choose to answer it the way you want, but just wondering, and I'm not asking for a prediction here, it might be difficult to do that, but the belief about 12 months back was that while Bajaj Finance held dominance in this market, which it virtually created of sorts, with HDB and now you say Kotak coming in as well, there will be a loss of market share because their the cost of funds for some of these banks and the fact that they've been around for ages, they'll be able to give cutthroat competition and wean away market share. Has it happened in the last 12 months at a frantic pace, or is Bajaj kind of managing to hold its own?
See, what is happening is definitely Bajaj being a leader, and if you say take 2 years before, there was only Capital which had just started coming.
Capital First, yeah.
Capital First had just started coming in, and Bajaj being the leader. So if so many players are going to come in, if anybody's share is going to go, it's going to be Bajaj. But at the same time, he may be losing a little bit of share, but he's growing on his numbers. So market is expanding for consumer durables. And I think he's in a very strong position. Brands will take, other financiers will take at least 2 to 3 years to make a major, if they are able to dent on Bajaj's market share.
Okay. Great. It was useful chatting with you today, not just from a perspective of consumer durables, but a lot of other information pieces that you gave us, Nilesh. Thank you so much.
Thank you
for that, and wish you a very happy 2019. Hopefully, it turns out much better than the last quarter of 2018.
Yeah, definitely. And I wish everybody a great year ahead.
Thank you so much, Nilesh.
Thank you.
Pleasure having you, as always. Well, you usually get a nugget or two of information from Nilesh Gupta about a lot of things happening in the consumer space. Today was no different. Bajaj Finance still holding its way. Online versus offline retail. The conversation will probably go down to the wire. Let's wait and watch what happens there. But that's only as much time as we had for this conversation. The next conversation is Dhanuka Agritech. Now, irregular distribution of rainfall could hurt margins for some of the companies, the agri-input makers, like Dhanuka, for example, as the farmers head into the Rabi sowing season. Growth for the agri-input sector has anyways been slowing down over the last 5 years, but now there is assured support in form of farm loan waivers and MSP hikes as well. So, how do you make sense of all of this, and what would it mean for business? Let's get a picture of that. And what's happening on the ground with MK Dhanuka of Dhanuka Agritech joins us right now on the show. Mr. Dhanuka, good having you. Thanks for joining in. This whole conversation around water levels being low, lack of availability of water, and that impacting various facets of the agri business. Can you throw some perspective here and what it would mean for a company like yours as well?
Yeah, you are right that the reservoirs water levels are low, and the sowing for the Rabi is also less in comparison to the last year. So overall picture is not very rosy, but I foresee that still there are some states where the water availability is there and green patches are available everywhere, especially the vegetables and horticulture crops. So we are concentrating on that, and we hope that at least we will be able to deliver single-digit growth over last year by 31st March 2019.
Okay. Is there, I mean, I'm guessing that there is still no clarity on whether the situation will ease or no.
I could not get you. Please
I'm asking
repeat.
Mr. Dhanuka, you mentioned that you hope that you'll deliver single-digit growth over last year by March 2019. But I'm guessing there is no assessment, or it's not possible to judge whether the pain will last beyond March or not.
One should be optimistic because we will be depending on the monsoon for the Kharif season, and if the monsoon for Kharif is good, then definitely 2019-20 will be a good year. So we should hope that the monsoon should remain good for the Indian farmers and Indian agriculture.
What would get impacted the most? And then I also want to talk about the Kohinoor scheme, which I believe is playing out well for you. But before I get to that, what would get impacted the most because of these water issues, Mr. Dhanuka? One is a business like yours, and how do you get impacted? Two is the other pockets, which may not be directly correlated to your business, but you have a sense of.
Naturally, if the farmer is not getting the desired yield, or he is not getting the desired price for his crop, he is not having money in his pocket. So he is not ready to spend for the consumer goods, consumables, etc. So overall it impacts the other consumable goods industries also, because the buying capacity for the farmers reduces, and that's why the consumptions also reduces for number of products.
What about the Kohinoor scheme, Mr. Dhanuka? I think there is an Edelweiss note which says that the Kohinoor scheme is playing out well for you. It's been appreciated in the dealer community. Can you tell us more about this and whether this helps you in 2000 or FY20 as well?
Yeah, dealers are very happy with the Kohinoor scheme because under this scheme we are basically replenishment of the goods we are doing. We are not dumping the stocks with the dealers. Our sales guy is visiting every week on twice to the dealers, and he takes the inventory. There is mobile app given to the sales guy, and then he fill up the inventory in the mobile, and accordingly the mobile app suggests what order dealer should place, and then we supply in a small quantity to the dealers. So he's not stuck with the inventory, he's not stuck with the payment, because he gets on regular basis whatever is sold. So dealers are happy because his ROI has increased tremendously and he is not stuck with the inventories.
Interesting. So you mentioned that with all of these points and with Kohinoor shaping up well, you'll still end up doing about single-digit growth for March 2019. I'm guessing that margins will also not move up, so margins will remain flattish too. Are we to presume that the profit growth numbers or the profit numbers would be very, very flat for the year?
Yeah, you are right, because of two reasons the profitability has been impacted. One was the dollar, because initially when we made the imports, the rupee dollar was at 68 rupees. But after 6 months when the company made the payments, so at that time the payments were made at 73, 74. So one impact on the margin was this. Another impact from China. Number of chemical and pesticide and intermediate factories in China, around 15,000 factories has been closed down, due to which the prices of raw material has increased drastically, while the prices in the market for the brand has not increased in the same proportion. So because of that also the margin has been impacted. We foresee that the EBITDA margin, there can be 100 bips dip in the EBITDA margin over last year by 31st March.
100 basis points dip, okay, and therefore the profitability too could be under pressure. Lastly, you of course gave out on expected lines the buyback very recently as well. Is there any more plans of doing this? This was a small buyback, but your cash flow generations remain strong. If the stock prices don't move up because of whatever reason, do you reckon that you will do more of such buybacks as well, Mr. Dhanuka?
No comments right now. This decision has to be taken by the board. So,
okay. We wish you all the best though for a better FY20. You already gave us a view on FY19, so appreciate that. Thank you so much and wish you all the best.
thank you. Thank you. Wish you all the best and also a very happy new year.
To you too, sir. Thank you so much. That's MK Dhanuka of Dhanuka Agritech. Well, the main reason why we got this conversation going was this whole set of reports and market chatter around lower water levels and what it would do for some of these agri-input companies. Dhanuka Agritech affirming that there is indeed pressure, and that coupled with margin pressures could lead to lower single-digit growth levels for the company for the current financial year. Okay, the markets, just before we wrap up the show, are doing okay. The broader markets has some PSU names which are doing well though. MTNL is up about 12.5%. Dredging Corporation is up about 12.5% as well. MMTC about 3.5%. NTPC and ITI 3% and 2.5% respectively. So PSU names are certainly doing well for themselves in trade. What's not doing well? Well, there goes United Bank. We were speaking about in the morning and how you should be careful when you trade these names. But after 2 days of gains or 1 day of gain, United Bank cools off quite considerably to 2.5% down. Okay, now just about 1% down. But looks slightly weak currently is United Bank, and names like Canfin Homes and Interglobe Aviation are looking slightly wobbly in the session today. On the Nifty, it's all about the metal names which seem to be doing okay. Hindalco, Vedanta, Tata Steel, etc. all of them seem to be packing quite a punch. Nevertheless, it's a wrap on this leg of Indian Open though. Thanks so much for watching and stay tuned to Bloomberg Quint Live. The FNO show takes forward the action on the other side.